Welcome to your weekly market update. Lots of good signs for home prices, lots of great signs for interest rates, some not so great signs for our economy. So let me share a few things just to prove this point to you. You've heard the media, you've heard everyone say we're heading for a housing crash. There are 4 different readings that said they couldn't be more wrong. CoreLogic was up 0.8%. That's almost 1% in February. Remember, interest rates in February were almost 1% to 1.5% higher than we're at right now. The forecast for the year in housing appreciation is up to 4.4%. That was just 3.3 or was just 3.7%. FHFA, which measures conventional loans and homes getting a mortgage, that was up 0.2%. Black Knight, which is my favorite valuation tool, was up 0.2%. So since the 2022 home price peak, right, we've just seen Case-Shiller's reading come down 2.95%, Black Knight 2.6%, FHFA 0.6%, and 1.6% in CoreLogic. Now, people use that fact in that data and skew what's happening in the housing market. You have to remember we're up 116% in home prices over a 10-year period, and 40% of that has come in the last 2 years. So home prices remain very, very strong, and we continue to see that. So if you look at this chart, you can see up 116%, like I stated. 40% of that has come since about the middle of 2020. So to only be down 2.95% is next to nothing. Shelter continues to play a big part of this. I've talked about this all year. Shelter is at 2.6% in increased price over last year. The yearly average that the Fed looks at is at 8.1%. So that's 43% of the Fed's favorite inflationary reading. What I mean by this is going to start to pull down hard, which will pull inflation down hard, and mortgage rates follow inflation. And what I was talking about of active inventory, there is 2.8 million active mortgage applications in our country for mortgage financing. There are 563,000 homes available. This doesn't even count the cash offers, and 61% of the deals in the first quarter across our country were cash offers. So what does this all tell you? There is a huge lack of inventory and limited with a ton of buyers, 2.8 million. Now, all of those people might not still be looking for a home, but it's at least half of them are, right? Worst case scenario, and that's still over almost 1 million more people looking for homes than there are homes available. Now, what's going to happen when mortgage rates come down, which I believe will happen on May 10th, and they've already been trending down, as you can see. Lastly, there's less money circulating in our economy. So dollars are shrinking, credit's shrinking. That doesn't mean mortgages are stopping. It does mean you see a lot of personal loans drying up. You see loans to build property drying up. You see car loans not being available. And I would imagine in your mailboxes, a lot less credit card offers to roll over. I used to get like 7 or 8 a day. I get 1 maybe a week right now. So what does this all mean? This means dollars are shrinking. This means there's no more rollover in credit cards, and this bodes well for home prices and interest rates. So do not wait. Don't wait for all these added buyers on top of the 2.8 million already looking when rates come down here over the next month. This trend will continue, and we believe now is the best time to buy a home. If we can help you get under contract, we hope you find value in these updates. Interest rates are down about another 0.3% this week. We're seeing rates in the higher 5s, lower 6s Depending on your credit score, depending on your debt to income ratio, know that now matters. And depending on how much of a down payment you're making. If we can run any numbers for you, give us a call, 312-731-4939. Thank you for watching this weekly market update.